One way to invest in I bonds is actually to use your tax refund. How do you do that? Should you do that? I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, did you know that you can use your tax refund to buy a government bond that's paying nearly 7% guaranteed? Yeah, that's right. That's right. These I bonds, and no, they're not an Apple bond, Apple investment. No, it's inflation bond. These are unique types of investments, treasury bonds, savings bonds issued by the Treasury, of course, that are guaranteed and offer an extremely competitive interest rate. They actually became really popular. They've been around for a long time, but they've become very popular as we've had this inflationary surge over the past couple of years. Essentially, how I bonds work is that when you invest in these bonds, you can hold them for up to 30 years, but your interest rate varies. There's two components. One portion of the interest rate is a fixed flat amount that is locked in for the entire 30 years or however long you own that bond. That interest rate is zero. And over the history of I bonds, there's been times when it's been a small amount, but for the most part, it's zero. And then the other portion of the interest rate varies actually every 6 months depending on what's going on with overall inflation. And right now, that inflationary component of the interest rate has an annualized interest rate of 6.89%. Fantastic, nearly 7%. And if you're amazed by that, the previous interest rate was 9.62%. 9.62. Previous to that, so 6 months before that, it was above 7%, and then it was back down to earth prior to that. But during this inflationary surge, we've seen this interest rate get up to unbelievable levels, especially when you look and say, well, this is a risk-free rate of return. If you're new to I bonds, then you're probably looking at this saying, well, this is a no-brainer. I'm going to put all my money in there. And no, you can't. And it's not a no-brainer for a couple of reasons. Number one, this interest rate is only locked in for 6 months. After 6 months, it varies again, okay? And so you're locking in this interest rate, but then you know it's going to change and you don't know what it's going to change to. And eventually at some point, as we've seen throughout history, this interest rate is likely, whenever inflation does calm down, if we see a double top inflation, then you're going to be glad that you held these. But if we don't and inflation is on its way down, this interest rate is on its way down as well. So then you're locked in. Once you invest dollars into the I bond, you're actually locked in for 12 months. You can't withdraw the dollars. If you then withdraw the dollars after 12 months, but within a 5-year time period, the first 5 years, you actually have to give up some of your interest in order to get the money back. You give up 3 months worth of interest. But after 5 years, you can then withdraw your dollars whenever you want, and there's no penalty or anything like that. But after 5 years, up to 30 years when it officially matures. But the other reason why you can't put all of your dollars in there, this isn't a no-brainer, is because you actually can't put all your dollars in there unless you conveniently only have 10 grand to put in there. That's right. There's a annual limit that you can only invest up to 10 grand into I bonds electronically using Treasury Direct per year. Now that's per person. So if you're married, you can do 10 grand. Your spouse can do 10 grand. If you've got a trust account, you can do 10 grand for your trust account. If you have a business, there's a few ways that you can bend the rules or play the game here, but essentially it's a 10 grand limit. Except you can actually use, in addition to that 10 grand, you can use your tax refund to invest in another 5 grand of paper I bonds. That's right. So if you're if this interest rate is extremely appealing to you and it makes sense in your overall financial plan, then hopefully if it does, then you've already done the full maximum that you can do electronically, because let's face it, that's going to be the most convenient way to invest and hold these I bonds. But if you've already done that and you want to do even more, then up to 5 grand of your tax refund you can invest into paper I bonds. And most people, when they then receive the paper certificate, they log into Treasury Direct and they sort of convert them, they move them, they track them online using Treasury Direct. All right, so how do you do it? How do you do it? So you fill out tax form 8888 when you file your tax return, and that allows you to elect to have portions of your refund allocated to purchasing I-bonds in $50 increments, okay? So using that form, you can make the election to say, I want, I'm getting $2,000 back, I want 1,000 of that to be in I-bonds, and then they'll issue the I-bonds. Or I'm getting 3,000 back, I want the full 3,000 to go in there. If your refund's more than the $5,000, then you're limited on that $5,000 in which you, that's the cap. That's the maximum amount of your refund that can go into purchasing paper I-bonds. A couple other details you may want to know. Can you use this method to actually buy I-bonds for other family members, maybe a child or something like that you want to give away? Yeah, you can actually do that as well. What about, because we know the interest rate changes, this interest rate of 6.89% is locked in until the end of April, so April 30th. So any bonds purchased by April 30th will then get this 6.89% interest rate for the next 6 months, likely to be lower when the interest rate changes starting May 1st. We'll see what happens with inflation. But so you got to know that, well, the date at which you purchase these, this is important. So when you make the election, when you fill out Form 8888 with your tax return, so what date are these bonds being purchased? The beginning of the month in which the IRS receives the form. That's right. So all the way up until, if you're filing your taxes on April 15 or April 18 this year, and you fill out Form 8888 and say, I'd like to purchase paper I-bonds with this, you'll actually get this interest rate, the 6.89% interest rate, because it's going to be purchased as of April 1st. And then the final FAQ, the big, I actually didn't understand how this worked until just doing a little bit of research for this video, and that is, what if your tax return's wrong? What if you fill out a tax return showing that you've got this big refund and you say, yes, I want this refund issued in I-bonds, and then the IRS goes through your tax return and your refund's actually not supposed to be that big? You made an error on your tax return. Well, in that case, guys, if the error results in you getting a lower refund, then the bonds are canceled. Can you believe that? The bonds are canceled. So here's the thing, for those of you that are maybe, trying to game the system, and you look and say, well, I'm going to lie on my return to actually inflate my refund and then use that refund to buy I-bonds. If you get caught, guys, they're just going to cancel the bonds. There's no loophole here to work to get around. So make sure, as always, no one wants that tax surprise, that tax notice. Make sure your return is accurate, and could you make a mistake? Sure, but make sure your return is accurate before you issue it, because it can be complicated if you're filling out Form 8888 and you're wanting some of that refund in the form of I-bonds. So that's how you do it. That's what they are. That's how you do it. Now, should you? Now, guys, here's the thing. It's got to fit within your overall financial plan. This is a fantastic interest rate, and yet we know that our economy cannot operate long-term at inflation at these levels. It just won't work. It just can't work. Inflation is a tax on all people, and therefore it just creates a significant amount of economic turmoil, economic pain. So the powers that be are going to be doing everything they can, even though they created inflation, to get it back under control. And what that means is these interest rates will go from being attractive for a season to unattractive. And the question is, when they become unattractive, are they so unattractive that you need to get your dollars out of there? And if so, would you be able to do so? Or is that going to happen within a 12-month window? Or is that going to happen where you're going to have to pay back some of the interest? I've talked to lots of people about this, and the folks that are savvy enough and understand these investments and have the resources to say, yeah, I'm going to throw some money in there, have said, yeah, no problem. I'm willing to risk leaving the money there for 12 months. And then if it's so unappealing that I want to withdraw the dollars, I can do so. I'll give up some interest. It's worth it. But that's the thing. These are extremely complicated investments. So you've got to be comfortable with them. They've got to fit within your overall financial plan. You've got to understand the nuances and how to get dollars out and what would happen if you passed away while owning these. So there's a lot of things that you got to work on with your CFP before you'd say, yes, absolutely, you should consider this. So work with your CFP on that. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.